Hello and welcome to this section on robust price signals for maximum confirmation. And this is just a 5-minute video, nothing long. We go into much more detail on trend following in our courses, but let's just take a quick look when we talk about the basics of trend following and having robust signals are essentially the most important aspect of trend following. So all technicals lag. And the key really is to how do you find the right mixture of the signal that doesn't lag too much, but yet has a lot of confirmation in terms of trend strength, where it can keep you in that trend and you can ride it for as long as possible until two things happen. It either becomes fully exhausted and the risk doesn't warrant being long anymore and is overbought, or the trend changes. Now, typically, it's already when the trend changes, it might be too late and the price already significantly has been reduced. So what we like to do is try to be proactive, and when the price becomes fully exhausted, start reducing our position before there's a large correction in that stock. Also, in terms of trend following, what we're doing is trying to find a new potential trend. The issue is we don't want to find a trend that is already exceptionally strong or it already has appreciated significantly. And we'll discuss that in some of our later videos. How do we find these? Also, each trend, typically within a same industry group, has the same probability of appreciating the same if a new trend has emerged. For example, Apple, Microsoft, Amazon, if they all start a new potential new positive trend, there's no way of forecasting which one will appreciate the most. And then lastly, which is hard for a lot of people that are not involved in trend following to visualize initially, but you will have a lot of small losses and several big winners. That's just the way it is. So let's just take a look at a hypothetical example here. So on a hypothetical, and this is not any actual trades that we've made, but we're just showing it for a visual here. If I made a total of 28, 30 trades and 15 of them lost at least 5% here, 8 trades made 10% and 5 trades made 40%, well, that means 54% of my trades lost money. It doesn't matter if I have a 90% win ratio to make money because my total return, even though I lost 54% of my trades, I still made on average 7%. And that's because I made a few small losing trades and I made even a smaller amount of winning trades, but yet they were much bigger in size. So again, trend following is a strategy where you're going to have many small trades that lose and you're going to have some very big outliers. All right, so let's talk about really the most important part of trend following in terms of a system, and it's having robust confirmation for a max trend. So how do we achieve these 30-50% gainers without being whipsawed in and out of the market or scared and sell, so we can remove false signals? Well, we talk about this a lot on the site, and let's just take a look at some old examples here. So we have a rating value model that grades, you could see here, the blue line, the strength of the trend, and it maxes out at a 100. And we'll buy it at a 60 when it increases. Once it gets up to a 100, there's nothing to look at. The trend is just, it's moving along nicely. We could see up here the equity curve for Disney. So we're maxed out up here. Then what we want to look at is our counter trend, the mean reversion model. And you'll get alerts on the website for overbought, oversold, things like that. But We don't look at off-the-shelf indicators because, quite frankly, they are almost worthless for long-term trend following. When I say long-term trend following, the ideal trade is going to have you in a trend for at least 90 to 125 days. So the black line is the counter trend. The further north, more negative it becomes, the more buyers are stepping in, the more overbought it becomes. Now, we don't necessarily sell anything because it becomes overbought, and we'll discuss that in a later video how we exit these trades. But the point is, there's little momentum price noise in our models. If we look at off-the-shelf indicators like RSI, you get to overbought, you work that overbought condition off, it goes back to overbought, works that off, goes back to overbought several times, while our counter trend measuring overbought conditions for longer term trend following was very smooth and allowed you to stay in the trade as long as the counter trend kept on moving more south or more negative. Meanwhile, while you've seen several overbought conditions in the RSI and worked off again, Disney's price has just continually climbed and stayed stable. Then you have an older MACD, which is a moving average convergence divergence that measures momentum. Again, not a very good tool because it has a very short shelf life in terms of the way it looks at momentum. So MACD does have a place if you want to use it for some swing trading off of a counter trend reversal off of an oversold level, but really for longer term trend following, it's not going to allow you to stay in a trade. What you can see here is it has many false signals, and then both lines completely drop off, which if you were looking on that on a daily chart, you would think that the momentum is fading, while we could see up here the stock looked very good. The next example would be, and these are hypothetical trades that we didn't place, but here is Apple. Now, by the way, on the site you will learn that a 1 to 5 has 1 is a strong sell, 2 is a sell, 3 is a hold, 4 is a buy, 5 is a strong buy. But what is driving these ratings is really the rating value. And then these overbought, oversold conditions are the counter trends. So this looks beautiful. This is Apple. I think this was back in 2016. We started to go to a buy, and it really just held that 100 level or strong buy level. And then the counter trend just continued to decline further south. It allowed me to stay in this trade as long as possible until it became extremely overbought. Meanwhile, the RSI reached a 90 reading, held up there, and then completely failed. While what happened back in that February timeframe, the stock just kept on rising. And it looked like it was rising somewhere in the area of around 38. Stock hit about 145-ish, 144. So again, these are not good off-the-shelf indicators if you're really looking to squeeze that long-term parabolic move or that fat tail in terms of trend following. And then again here, if you're looking at the MACD, you had this signal line and then you had a cross and then they both completely faded down below. While again, our signal models stayed extremely robust and removed a tremendous amount of noise from the price series. So if you'd like to contact me and discuss this, just hit the contact button and feel free to shoot us an email. Thank you.